Welcome to Trading Lounge and the US indices for Friday the 25th of June, and starting with the Russell here, we can see that the Russell has moved higher and it hasn't taken out the top here to confirm this wave 3, but I believe that to be the case, and we'll be looking for wave 3 somewhere up around the 2.5 area. We can just normally, just roughly speaking, look at taking the length of wave length of wave 1 there, and then grabbing that and then moving it up to the lower end of group 2 there and coming up to the 161 here, and then the second target here. But you know, the psychology of the market really likes to work with large numbers, so that 2.5 there. But we'll just see how that performs. We'll just count that as we move along. On the hourly chart, we're long above here now, as you may know. Yeah, so that's going okay. And the good thing about this particular market, or pattern rather, is that we've got this accumulation process through here, Richard Wyckoff's work, and then we're going into the distribution phase here with this. But in Elliott terms, we'll be looking for 5 waves up of 1 and 2 and 3 and 4 and 5. Yeah, so that's all good. So long traders in this or ETFs can stay long, and that would be the same for the S&P500. So it's good here. We're just taking out the top here now, which really, let's just remove that. So we're just sort of tempting the tops there. So we can expect some profit taking to come into that space, and a bit of a correction there. So hold on to your horses if you're long in that. The fact that double tops are never the end of the trend, and yeah, we can expect some sort of vibration there. So depending if you've got leverage or not, and if you've over traded or not, position size too high for your account, and all those sorts of things. But if you've done everything right, you should be staying in this trend. Yeah, so I think this is, I kind of like this with wave 1 here and 2 here, and having wave 3 up here really makes the wave 3 a nice length compared to wave 1. Do you know what I mean? I've always sort of struggled with this a little bit, but I think a lot of Elliott people have struggled with this particular count in here. I mean, well, some people have more confidence than others, but it's always good to stay as humble as possible. But yeah, so that's all looking really quite good. So yeah, we're in a bullish market, and while the Fed's printing machine is printing, we'll continue to climb. So let's cruise in to the intraday zone. So just to get our bearings, we've got this wave 4 here, and we're looking at this as 1 and 2 and 3 and 4 and 5. Yes, I know we've got overlapping wave structures here, and that's a bit of a no-no, but it's kind of the philosophical best fit, I would assume. And then we've got this ABC that comes right back into our wave 2 area here, so that's all good. And as I mentioned, we're just tipping the top here now, so that's all good. I was expecting it to pull back a little bit further, but that's not the case. But I think we need to expect, even though we didn't get the ABC pullback, I think we still need to be a little bit mindful of getting that. And I think that if I just go to my quick cash market chart, it's just the cash markets, because the market I've been working on is a CFD product, so I've got to be a little bit careful. But just follow me here a little bit. The not the big crosshair, but the little crosshair. So from the low here, we can look at this as wave 1 here, and then a little 2 in here, and then we've got the third wave here, which is 1 and 2 and 3 and 4 and 5 for the third wave, and this is the fourth wave here, and this is the fifth wave here. Now the fifth wave may have a 1, 2, 3, 4, 5 and build a little bit higher through here, but this is what the count that we're going to look at in a moment is coming off the cash market. Okay, so we've got all of wave 1 here and 2, then 1, 2, 3, 4, 5 here for the third wave, sideways for the fourth, and then up for the fifth. So we could have a top in play here, or this can be wave 1 and 2 and 3 and move up a little bit higher. So that's where I made my mistake yesterday. So we're just going to go in and have a look at that. I'll go to the hourly chart, but yeah, so in a nutshell, it looks a bit weird because yesterday I had it as 1 and 2 and 3 and 4 and 5, and I was quite comfortable with that actually. But then looking at the cash market, which I should have done, just being a lazy Aussie, but yeah, so this here looks a little bit weird, but it's in line with the cash market. So the ABC that we're looking for can still come back to this point here. So I really, I think it's important to recognize that, we're in a blue wave 3 here, and you really need to be hanging in there for this, The other point here too is that it may not pull back this far here either. It may just do something like, and it may not even reach the 4-3, but that's where it's going from. But now that it's in group 2, it's got a good chance of moving higher here. So let's just assume for a moment that the market does push up to here. Then the reaction will just be from this point, It'll be something like this, only coming down to the wave 4 of 1 lesser degree and then moving higher. So I'm not quite sure. We'll go to the tick chart, but the important thing here, the takeaway, is really just to try to stay in the trend and, ride that situation. Let's just get a bit more data in here. So just to sort of compare this to the cash price, in the same vein, it would be 1, 2, 3, 4, 5 for 1 and 2 here, and then all the way up for the 3rd and 4th here. And then I was looking at this as 1 and 2 and 1, 2, 3, 4, 5 here for the 3rd, ABC for the 4th here, and then going up for the 5th here. So 1 and 2 and 3 and 4 and 5. So it can, it can finish in this space here and have a correction here. And it can come down to the wave 4 of 1 lesser degree. That would be probably it. But being a Friday, would expect it to be bullish. So I wouldn't expect it to. You just never know, do you? But and being at the old high as well, there will be some fluffing around here at the old high, and the fluffing around, the vibration will be this wave 2 here. But I think it might just come back to the wave 4 of 1 lesser degree rather than all the way back down to 4,200. So yeah, we just need to keep a bit of an eye on that. And the NASDAQ, so that's cruising along okay. I expect wave 3 to be somewhere up around the 15,000 mark for this. So we need to understand this. I think I really need to rejig this here as well, because this is the NASDAQ 100. It's a CFD product as well, so that makes it a little bit more sort of difficult. I think I need to move away from this charting program. So if I look at the NASDAQ comp for a moment, so this B wave that I've got up here looks okay as an A and a B and a C. It looks kind of natural, but when I look at it on the comp here, I can count it up as 1 and 2 here, and 3 to here, and 4 to here, because there's 5 waves in this little move here, and then this move here. So and then in that case here, it kind of presents this as a reasonable 3-wave move here. So, I mean, I think I've been over this before, but we might have to move back to it. It's not quite sort of resolved just yet. So, yeah. And this count here, don't worry about this too much. It's kind of right, but it's not there just yet, because this length of green wave 1 here, right, compared to this one here, makes this green wave 3 too short. The only way that can be correct is if this next structure here is actually shorter than wave 3, which may be a possibility, but I wouldn't expect that to be shorter. This one here, this green wave 5, to be shorter than wave 3, because we're actually also in a larger wave 3, in this blue wave 3 up here. And also too, I was looking at This is just my own charting program that sort of had for years. It's free. You can download it off the website. It takes a Metastock data feed, and it. I mean, I like it because I've got a little bit of Elliott labeling here and the trading levels here. It's not a very sophisticated sort of program, but you know, I buy this data and from Just Data in Queensland for in Australia. So I kind of trust the data, you know what I mean? But here, once again, I can see, like, we could look at this as wave 1 with an ABC pattern here. And then all of this is 1 and 2 and 3 and 4 and 5 here for the third wave and the fourth wave, and just making a new high. This is the triple Q anyway, it's just an ETF, and then the A, B, and C here for this. So I think that I may need to re-look at this in a different light, you know. So anyway, just wanted to point that out. So getting there with that. Don't need that. So yeah. I think one of the good things here is the NASDAQ is, you know, or a couple of things really. It's made a new high here. It's sitting on it's got a nice tested support on the 14,000. We're looking for that. I still think it's got further to move up here for this, obviously. And I'm still toying with the count. But yeah, I mean, once again as well, I mean, this move here was longer than this move here for this. So I think this can be counted like this, okay, as 1 and 2 here, then 1 and 2 here, and then 1 and 2 here, and then going up for the third, fourth, and fifth for the green wave 3 here. You with me? And then the and then the 4 and the 5. So we're basically, you know, we're solidly in this trend. So hanging in there is where the money is, you know. Getting in and out can cause you lots of problems with this situation. Alrighty, well, that's enough for that. So we're looking for, we are looking for a little bit of a correction here as well. So, but apart from the correction, we should see, you know, Friday, Monday, and Tuesday be on the bullish side of the market. But there is that small correction in there that you need to ride out through the rodeo, so to speak. Okay, so let's just have a look at US stocks. So starting with Tesla today, and we're looking at it in two ways. We are currently long above the 650, which is a medium level. Medium levels are just halfway between two major levels, so 500 and 800. And yeah, so two ways. We're looking at is wave 3 up here with an A and a B and a C wave finished here for wave 4. Hasn't really made a new low down through here, so we need to also look at this being this move down through here as wave 1 and moving back for wave 2 here. It has hit the 61.8% retracement level there and been sold off from that particular point, but at the same time the move up here is not completed yet. So even if this was going up to a wave 2 here, then this would be the A wave, the B wave, and the C wave up here, and the C wave would have 5 waves in it. So even just looking at it like this, we could look at this as wave 1 and 2 in here, and this is the third wave. He would still need the fourth and the fifth wave to come into play. So normally there will be, I can just see here where the supply is anyway, so from that top and those lows that are over here as well. So that would be, and that would be closer to the 72 number that I'm always harping on about. So we should actually put that in there because, you know, 65, 72, and 80 is something that we look at. So we will put that in here. Just bear with me a little second. So that's 720. 720. Yeah, so that's where the supply will be, so we can keep an eye on that number. I mean, the other point to that too would be that instead of 61.8%, it could be the 78.6 as well, you know, which is even higher here. So we'll just bear that in mind as well. So the 72 is a nice fit for that. Yeah, but all we can do is we can, from this low here, the only way to to know about it. I mean, my mind's limited, so if you've got a better idea, that's good. But all I can do is from this low here to this high here, we just count 5 waves up. And then we exit our long trade and we just wait and we see if we get a corrective pullback. If we get a corrective pullback, then we can move into the market again. If we get an impulse situation occurring, then we can look for the short side. So based on that idea, we'll go to the tick chart and check on things. So as a bullish move, we'll look at this as wave 1 and 2 here. That's pretty simple, or an A and a B, and we still need the C wave up here. So as the C wave up here, as 5 waves, the green one is what you'd be looking for to exit. So that would be 1 and 2 here, and 3 and 4 and 5. So we'll go in and understand that a little bit better. If it's going to be more bullish, then we'll be looking for the 4th wave there and the 5th wave up that way. So yeah, let's check it out. So we've got wave 1 here and 2 here, and then we're going up for green wave 3 here. Okay, so with from wave 2 to wave 3 here, we're looking for 5 waves of 1 and 2 and 3 and 4 and 5 here. So we can put that top in here. We'll check that out in a moment, and then we'll put that there somewhere. That can be at the 720 mark there, so we'll pop that in there. In fact, we can just also put in group 1 here, so that would be 10, 20 and 30, and then we've got 50 here as the next. Close enough. Yeah, we can put other levels in, but just before, we don't need to do that, I guess, but 1 and 2 here, and then we've got 1, 2, 3, 4, and 1, 2, 3, 4, 5 here for the 5th wave of the 3rd. So this 4th wave pullback here, from that wave 2 low to that wave 3 high, this line through here is roughly the 30-40% retracement level. So it could come to that. It could come down here further. It may not come all the way down, but it can come down further before pushing up here, and then we'd have an ABC pattern here for this wave 4 that can pull back to the wave 4 of 1 lesser degree, wherever that goes, and then wave 5 up here. So really we've got a classic trading levels pattern here: the arrival, the reaction, the first high above the level, the ABC pattern coming in there. Because we actually have reacted from that 700, you know, we're getting this will be the pattern that we'll be looking at. Okay, so that's all pretty straightforward, and we'll just go to Facebook. I won't spend too much time here, but yeah, so we're looking for we're looking for all markets to move higher. So, you know, we just really need to be long. You know, this is the time to make money. And yeah, so we went long here yesterday. Hasn't moved very far here. And we've got one tight stop here, or a larger stop sitting back over here. This larger stop could actually be pushed up a little bit higher now to probably 316 or 312 in that area there. We don't want to put it above the 320 at this point, okay? Because in group 1 here, this is 300, and we've got minor group 1, which is 1, 2, and 3. If the number 2 here becomes the retested resistance, then it's going to be pulled back down to this point. It's okay for it to spike down, and a lot of times it just spikes. The normal thing is that it will spike down to 15, because 5 is the second strongest number. Anyway, 15 in there, and then push up from that point. But if it ever becomes the resistance by taking that low out here, then, and this is the same, this is just trading levels theory stuff. Yeah, we can just put that up there at 12. That should be okay at that point. So we'll just sort of hold on to that for the time being. Actually, just before I bring the next one across here, yesterday we drew this line up through here and looking for this to be a wave 1 up here. So we can pull back to the 50-60% retracement level here. So expect a move back before a push up. So from the low to the high, wherever the high is, you can draw your fib tool back to the 61.8%. And when you do that 61.8%, always take in account what number that you're looking over here. So if you understand the trading levels idea, the 1, 2, 3, 5, and 8, then that will be very helpful as well, because it's not only, I mean, you could call it the psychology of it, but the psychology really is, when you boil it down, it's how people think about numbers, and at the end of the day, it's where the volume sits, it's where people buy and sell. So that's the reality of it, and some numbers carry more weight than others, as you know. So 1 being the strongest number, then 5, then 8, then 3, so on. I mean, 3 is a bit of an odd, but you can see 3 here. I mean, it got topped here, and then it became the support over here. So yeah, it's important. Okay, so with square, we're looking at wave 3 here, an A and a B and a C, a little bit like Tesla really. So we can see this pushing higher as well. Now we do have one position, just in half a position in here. I won't worry about going on to the intraday today, because what we're looking for next in this move is we want this number here, the 250, the medium level, halfway between two major levels, to become the support. So there's going to be a fair bit of fluffing around in here as well. Okay, so we won't focus on the vibration too much. We know the market's going up. We also know that from, I'll just double check where I got that from. Was it this high? This is, yeah, that one there. Well, that's a little bit higher. Let me just check on this. It will hardly be any difference really, but yeah, it's not much too. There's 261.8% that are close in amongst all of that. But this is where the psychology comes in. They'll be thinking of the 250, and before the 250 will be the 248, the 8 before the 5. So people will think of 8 more so than 7 and 9. Do you know what I mean? I mean, 7's pretty special, but 8 carries a bit more weight. But anyway, what we're looking for here is some sort of classic trading levels pattern sitting here as well, some sort of arrival reaction, some sort of something like this. You know, sometimes they're pretty pictures and sometimes they're, you know, really butt ugly. So yeah. Okay, and just moving through them pretty quick today, because we know that the markets are moving up, but we're also expecting a little bit of a correction on the Friday as well for that. And the same would go here for Apple as well. We talked about this yesterday, how it's basically been, this whole pattern's been moving sideways through here, but slightly snaking to the upside, because we've got these higher lows coming into play, and it really delivers this number here, the 130, which is the top of minor group 1 of 100, and we're really looking for that to become support. So we also know with this is that there's a little 5-wave move up here, so we can also expect a little ABC pattern through here. So you need to work out if you're going to be, you know, flicked out of that particular pattern at that point. And Google, we're not trading this at the moment. We can see that it's having trouble at the well, in this case, another medium level, halfway between two major levels, but a power of 10 higher at 2,500. So it's struggling here, and you know, you could count 5 waves up here, 1, 2, 3, 4, 5 coming into here. So it's sort of ready to have a bit of a correction. But this market, Alphabet, can be doing its own thing in its way. It doesn't kind of, yeah, a little bit, it's got its own pathway. Okay, so that leaves Amazon. So with Amazon, in a nutshell, we'd been looking at it in terms of a bearish pattern. I can't throw that out just yet because you know, we had this as a top over here, and then I've changed it to wave 1 and 2 here to be in line with the other markets. But still, I'm left with this possible A, B, and C wave right to this point here. And the way that I was going to resolve this to become a bullish pattern from wave 2, moving up to, you know, 4,000 as wave 3, so to speak, is we need support on this level here, the 3,500. And we were looking for a bit of a classic trading levels pattern again. We're looking for the arrival, the reaction, which we're basically getting here now. And then we still need the first high above the level, and then we could use the second high above the level to go long on. So we're not there yet with this. We don't have a position. We could bring this, we could bring this down to this point here now, but I'll just need to check the intraday before, you know, we get involved in that. But what I'm looking for here in a nutshell is we want that number to be the support so we can trade long. Is that support at the moment? Nah. So let's just go in and check on this in the tick chart just to get a bit of an idea about it. So originally, as you know, we've been looking at it as a wave A down here and a wave B back up to this point, and tracking it as an A wave and ABC for the B wave here, and then counting to the upside here. So in counting to the upside, see, I can't throw this out just yet because from wave B here to wave C here, I've got 1 and 2 in here, and then 1, 2, 3, 4, 5 here for the third wave, the fourth wave, and then I was counting this up here as 1 and 2 and 3 and back for 4 here. And now this is finished off reasonably quite nicely here. So I can put wave 5 here with wave 5 here of wave C here. And, you know, we could put wave B here. So not that it matters that much at this point. So 1, 2, 3, 4, 5 here. And it does appear that we got some sort of little impulse wave down here as 1 and 2 into there and 3 to here and 4 to here and 5 to here. So I'm thinking that we may get, you know, a correction here in 3 waves and then another move back down here for this. So really it is probably the I'd still just call this the arrival here, and this would be the reaction here. So we'd still need to see a move like this and then a move something like this, and yeah, so I think it's going to be sort of fluffing around here for a little bit, and we're a little bit early to go long here, so we don't need really to do much at this particular point in time. We'll just chill on this and we'll gather some more information. You could go long above here, but you'd probably get trapped here again. So yeah, I'll need to just think about that for a little bit. It just depends on how powerful the whole market's going to be. And it also depends too if this, you know, we've got to get past this possible A, B and C wave that we've got here as well, you know. I mean, this never really counted nicely up here as a wave 1, unless I put this somehow, I have to double check this trend here. I have to go back over my work and check it. But as it stands at the moment, all I can say is that this number here is not the support. You could probably buy the pullback if you're really keen, but just remember that you're facing this situation here as an A and a B and a C, which I could certainly be wrong because it has retraced really high up here, but technically it can just stay within the top. I'm not really worried about this 5th wave that really came up here. I'm more interested in this one here, that's just that one there, because counting this one, well, I'll just count it. Just count it from here. So we've had this pullback here of an ABC pattern here, yeah. So then we've had this 1 and 2 here, and then this massive 3rd wave here, and then the 4th wave and the 5th wave. This is what silver did with the Wall Street bet guys, the same sort of pattern. So I don't like using that spiky high. I like to stay within the traffic. So I can even see 5 waves in this last move here. So, you know, if this was in 3 waves up here, then I could call it as part of this. But this one hasn't finished off correctly. So that is 1 and 2 and 3 and 4 and 5 here. You know, you could probably label it as a truncated 5th wave, but I wouldn't call it a truncated 5th wave because you can see that wave 3 here has gotten out, you know, something's occurred here for that. So anyway, that's the top that we should be looking at. But I suppose there'll be a psychological drift on this one here as well. But anyway, just bar talk. Okay, so yeah, that's it. So just sort of recapping a little bit, I think that I think just putting the S&P 500 back over here, based on the cash market, that we can have a pullback with all of this. So this has moved along a little bit now. So we could look at this as 1 and 2 in here, and wave 3 here, and 4 here, and 5 here. So somewhere up, probably won't reach all the way up here to 4.3, but somewhere around the 42.80 mark here. But the funny thing is that, you know, most of the time when I see corrections in group 2 here, they normally stay in group 2. You know, the ABC will just stay in group 2 here, however complicated it gets, and then move up from that point there further. And becoming into Friday, where we normally look at Friday being bullish, we'll see. We'll just see, you know. But if Friday closes strong, then Monday's going to follow through on that. I mean, it's a little bit like the weather, isn't it? You know, what's happening today, it slightly moves into the next day. So there's a 60% chance of something following through all the time, you know. Unless you live in the tropics, of course. Okay, I'll leave it at that. Enough waffling. Enjoy the weekend. Cheers.